Welcome to The Deep Dive, the
Yeah.
show where we take these complex financial topics and really try to break them down
Yeah,
so you can kind of see the bigger picture.
that's right.
Today, we are diving deep into a proposed change
Yeah.
by SEBI, India's market regulator,
Right.
that could actually have a real impact
That's-
on your investments.
Yeah, it's true.
Um,
SEBI is considering a change
okay.
to how stock closing prices are calculated.
Okay.
And it's particularly relevant if you're interested in passive investing.
Okay, so let's start with the basics, I guess.
Sure.
We all know stock prices move up and down all day long
Yeah?
based on supply and demand.
Supply and demand.
But what exactly is SEBI looking to change?
Right.
And why?
They're looking at changing how we determine the official closing price of a stock,
Okay.
which is a surprisingly crucial detail.
Okay.
Currently, India uses the volume-weighted average price,
Okay.
or VWAP, for this.
VWAP.
Yes.
Yeah. Can you explain that in
Sure.
a way that even someone who doesn't trade stocks every day can understand?
Think of it this way. Imagine the closing price is like an election.
Okay.
But instead of each vote being equal,
Yeah.
the bigger trades get more votes.
Okay.
That's essentially VWAP.
Okay.
It averages the price over the last 30 minutes of trading,
Okay.
but it gives more weight to trades with larger volumes.
So one giant trade right at the end could really skew things.
Exactly. And that's where the problem lies.
Yeah.
VWAP can be distorted by those last-minute large volume trades,
Right.
especially on days
Okay.
when big funds are rebalancing their portfolios,
Yeah.
or when certain types of derivatives contracts are expiring.
Okay.
This can lead to a closing price that doesn't truly reflect
Yeah.
the overall market sentiment for that stock.
And this isn't just a theoretical problem, right?
Right.
The articles you sent mentioned a specific example.
Right.
Yeah.
One article used the hypothetical company,
Okay.
Hello Ltd, to illustrate this.
Okay.
Let's say Hello Ltd has been trading around €100 all day.
Okay.
But just before closing, someone dumps a huge block of shares at 90.
Okay.
That one trade
Right.
would drag down the VWAP, making the closing price look much lower
Right.
than it should.
Okay. So we've got a system that can be gamed
Yeah.
by well-timed large trades.
Yeah.
But why should the average investor care about this?
Because it directly affects the performance
Okay.
of passive funds,
Yeah.
which are becoming increasingly popular in India.
Right.
Passive funds are designed to track a specific index,
Right.
like Nifty 50.
Okay.
By holding the same stocks in the same proportions,
Right.
they base their trades on those closing prices.
Yeah.
So if the closing price is artificially inflated
Okay.
or deflated due to VWAP quirks,
Yeah.
the passive fund's performance won't accurately mirror the index.
So my returns could be lower
Potentially, yeah.
than they should be because of this closing price calculation.
Uh-huh.
That's frustrating.
It can be.
Yeah.
This discrepancy between the fund's performance
Yeah.
and the index it's tracking is called tracking error.
Okay.
And it can erode investor confidence.
Right.
And remember, passive funds in India are no longer a niche market.
Right.
They manage assets worth a staggering 11 lakh crores,
Wow.
impacting a huge number of investors.
That's a lot of money.
It is.
Riding on accurate closing prices.
What is a lot of money?
And you mentioned that the weight of Indian stocks in global indices is growing too, right?
It is, yeah.
Doesn't that make this even more important?
It absolutely does, as more global investors include Indian stocks in their portfolios.
Yeah.
Any distortions in our closing prices can have ripple effects across international markets.
Right.
And we haven't even touched upon the impact on derivatives,
Right.
those financial instruments that derive their value from an underlying asset. Those are especially vulnerable to VWAP distortions on expiry days.
Okay, so the stakes are high.
Yeah.
What's SEBI's proposed solution to this VWAP problem?
Right.
I know you mentioned something called a closing auction session.
That's right.
Yeah.
SEBI is exploring the possibility of switching to a closing auction session, or CAS.
Okay.
Think of it this way. After the regular market closes, there's a dedicated auction period
Okay.
for each stock.
Okay.
Buyers and sellers can submit their bids,
Right.
specifying the price they're willing to buy or sell at,
Okay.
and how many shares they want to trade.
So it's like a mini market,
It is.
just for figuring out the closing price.
Exactly.
Okay.
And here's the key difference.
Yeah.
With CAS, everyone can see all the bids and offers during the auction.
Okay.
It's a more transparent process.
Hold on, though.
Yeah.
some people might argue that actually makes things less transparent.
Okay.
With VWAP, at least you could see all the trades. That happened throughout the day.
Right.
With this auction system, all
Yeah.
you see are the final bids, right?
Right.
Couldn't that obscure what's really happening in the market?
That's a valid point.
Yeah.
It's a trade-off.
Yeah.
While the CAS auction itself is very transparent,
Right.
you lose some of the visibility into the intraday trading activity.
All right.
However, proponents of CAS argue that the auction provides a more accurate snapshot
Okay.
of market sentiment at the point of closing,
Okay.
which is what ultimately matters
Right.
for things like passive fund tracking.
Interesting.
Yeah.
So it's about prioritizing closing price accuracy
Right.
over full intraday transparency.
Uh-huh.
What do you think?
It's a complex question,
Yeah.
and there are valid arguments on both sides.
Yeah.
The debate around transparency versus accuracy
Yeah.
is likely to be a key point of discussion
Right.
as SEBI moves forward with its evaluation of CAS.
Okay, so CAS aims to make closing prices
Uh-huh.
more reliable and less susceptible to manipulation.
Right.
But the articles also mentioned some potential issues,
Yeah.
specifically with how things played out in Hong Kong, right?
Yes.
Yeah.
Hong Kong's experience with CAS is a cautionary tale
Okay.
that SEBI is undoubtedly studying closely.
Now that we understand the why behind this potential shift,
Right.
let's explore what happened in Hong Kong and what it could mean for India.
Welcome back to our deep dive
Yeah.
into SEBI's proposed stock closing price shakeup.
Right.
Before the break, we were discussing Hong Kong's experience with the closing auction session, or CAS.
Yes, and you mentioned it was a bit of a cautionary tale.
It was.
What exactly happened in Hong Kong that SEBI needs to be careful about?
Well, back in 2008,
Okay.
Hong Kong actually had to suspend CAS for a while
Really?
because it turned out to be vulnerable to manipulation.
But even though it was designed to be more accurate,
Right.
it ended up creating a new opportunity
Yeah.
for manipulation.
It highlights the fact that no system is perfect.
How I...
Exactly.
Yeah.
The article gave the example of HSBC,
Okay.
a major bank, right at the end of the CAS.
Okay.
A trader placed a massive sell order
Okay.
for HSBC shares, causing the price to plummet.
Right.
It turned out to be a temporary artificial dip,
Oh, wow.
but it demonstrated how someone with enough capital
Right.
could potentially influence the closing price under that version of CAS.
Wow. That's scary.
Yeah.
So what did Hong Kong do? Did they just scrap the whole idea
Not at all.
of a closing auction session?
They recognized the potential benefits of CAS
Okay.
and decided to refine it instead of abandoning it altogether.
So they brought it back?
They reintroduced it in 2016,
Okay.
but this time with some crucial safeguards in place.
Okay, so tell me about these safeguards.
Okay.
What did they do differently the second time around?
They implemented a few key measures.
Okay.
First, they limited CAS participation
Okay.
to stocks that are highly liquid,
Okay.
meaning there are a lot of shares being traded regularly. This makes it much harder
Okay.
for a single trader to manipulate the price.
It's like the more voters you have
Exactly.
in an election, the harder it is for one person
Right.
to rig the results.
Exactly. They also put caps on how much the prices could swing
Okay.
during the auction. So even if someone tried to dump a huge block of shares,
Okay.
the price wouldn't be allowed to plummet as dramatically
Right.
as it did in the HSBC example.
Okay.
And finally, they implemented a phased rollout.
Okay.
They started with a smaller group of stocks and gradually expanded the program, closely monitoring for any signs of trouble.
So it sounds like a much more cautious and well thought out approach.
It does.
Do you think SEBI is likely to take a similar path in India?
It seems that way from the consultation papers
Okay.
they've issued and the discussions they've held.
Yeah.
It's clear that SEBI is studying Hong Kong's experience very closely.
Right.
They're talking about starting with a limited set
Okay.
of liquid stocks
Right.
that already have derivatives contracts. And they're emphasizing the need for robust
Yeah.
risk management measures.
That's reassuring to hear. It
Sure.
sounds like they're learning from the mistakes of others
Uh-huh.
and trying to implement CAS in a way that minimizes the potential for manipulation.
Right.
But even with these safeguards in place, there are still some potential challenges, right?
Sure.
I know one of the articles mentioned concerns
Yeah.
about technology and costs.
Right. While the concept of CAS might sound simple enough,
Right.
implementing it in a real-world market environment
Yeah.
is quite complex.
Yeah.
It requires a robust technological infrastructure
Okay.
to handle the auction process efficiently.
Right.
And that could be a significant hurdle in a developing market like India.
Can you elaborate on that?
Sure.
What kind of technology are we talking about?
We're talking about high-speed order matching systems,
Okay.
real-time data feeds,
Yeah.
and sophisticated risk management algorithms,
Okay.
all operating seamlessly and securely. Building and maintaining such a system requires significant investment
Yeah.
and expertise.
Right.
And there's always the risk of technical glitches or outages, especially during those critical closing auction periods.
So getting the technology right is crucial.
It is.
What about costs?
Yeah,
Who bears the burden of those technological investments?
that's another important consideration.
Yeah.
There's a potential for increased operational costs
Right.
for brokers, exchanges, and even investors.
Okay.
Someone has to pay for building and maintaining that complex technology infrastructure.
Right.
And those costs could ultimately be passed down the chain
Yeah.
in the form of higher fees or commissions.
That's something for investors to keep in mind.
Yeah.
It's not just about whether CAS is a good idea in theory,
Right.
but also about whether it's practical and affordable to
Yeah.
implement in the Indian context.
Absolutely. The cost-benefit analysis is essential.
Right.
SEBI will need to weigh the potential benefits of CAS.
Yeah.
Increased accuracy, reduced tracking errors,
Mm-hmm.
enhanced market integrity
Right.
against the potential costs, both in terms of technological investment
Right.
and potential disruptions during the transition.
It's a complex equation with a lot of moving parts.
It is.
But let's assume for a moment that SEBI does decide to move forward with CAS.
Okay.
What would this change actually look like for the average investor?
Yeah.
What would they need to do differently?
Well, on a day-to-day basis, the most noticeable change would be the addition of that dedicated auction period
Okay.
at the end of the trading day.
Right.
Instead of the closing price being determined
Yeah.
by the flurry of trades in the last 30 minutes,
Yeah.
there would be this structured auction
Okay.
where buyers and sellers could submit their bids.
So the regular market closing bell would ring,
It would.
but instead of everyone packing up and going home, there
Oh.
would be this extra bit of time for the
Right.
closing auction to take place.
Exactly.
That's interesting. It almost adds a sense of drama, doesn't it? Like a final showdown to determine the closing price.
Yeah.
But more importantly, it could lead to a fairer and more accurate closing price.
That's the idea.
During the auction period, the order book would be open for everyone to see.
Yeah.
Meaning all the bids and offers would be displayed transparently, allowing for greater price discovery.
That's right.
Once the auction is complete,
Right.
the price at which the most shares were traded becomes the official closing price.
Right.
But wouldn't investors need to adjust their trading strategies if this were to happen? It seems like they couldn't just place their orders
Yeah.
in the last few minutes like they might do now.
You're absolutely right.
Yeah.
Investors, especially those who are used to trading
Yeah.
in the last minute of the day,
Yeah.
would need to familiarize themselves with the rules and procedures
Right.
of the closing auction. They'd also need to think about how their orders might interact with the auction dynamics.
It sounds like there would be a bit of a learning curve for everyone involved. There would be. From individual investors to brokers to the exchanges themselves.
Yeah.
Do you think the Indian market is ready for such a big change?
That's a question that only time will tell.
Yeah.
Any significant shift in market structure is bound to come with its share of challenges and adjustments.
Right.
But one thing that's encouraging
Yeah.
is that SEBI seems to be taking a very collaborative approach to this.
What do you mean by collaborative?
They're actively engaging
Okay.
with various stakeholders,
Yeah.
including brokers, investors, and fund managers.
Mm.
They've issued consultation papers
Okay.
outlining the proposed changes and have held numerous discussions
Right.
to gather feedback and address concerns.
That's a good sign.
Yeah.
It suggests that they're not just trying to impose this change from the top down,
Right.
but are genuinely trying to work with the market participants to
Right.
make this transition as smooth as possible.
Yeah.
Okay, so it sounds like they're taking steps in the right direction.
Yeah.
But let's be realistic. With any new system,
Right.
there's always a chance of unexpected hiccups or challenges
Of course.
along the way.
Yes.
What are some of the potential issues that you think could arise during the implementation
Right.
of CAS in India?
That's where we need to think critically
Right.
and consider the potential downsides. One concern,
Yeah.
even with safeguards in place,
Right.
is the potential for manipulation,
Okay.
as we saw in Hong Kong's early experience.
Right.
Those who are determined to game the system
Yeah.
often find creative ways to do so.
That's for sure.
SEBI will need to be extremely vigilant
Right.
in monitoring for any unusual trading patterns or attempts to manipulate the closing auction.
So constant vigilance is key.
Yes.
What else should they be watching out for?
Another potential challenge is ensuring
Okay.
that the technology infrastructure is truly robust and resilient.
Okay.
Remember, we're talking about handling a massive influx of orders and data
Right.
during a very concentrated period of time. Any technical glitches or outages during the closing auction
Right.
could have a significant impact on the market,
Yeah.
eroding confidence in the entire system.
So it's about more than just building the technology. It's about making sure it can handle the pressure
Right.
and that there are backup systems in place
Uh-huh.
in case something goes wrong.
Right.
What about the human element?
Yeah, that's a good point.
Do you see any potential challenges in terms of investor behavior or market psychology?
Even with the best technology and safeguards in place,
Okay.
the success of CAS ultimately depends on how market participants
Right.
adapt and respond to the new system.
Yeah.
There's always the risk of unintended consequences.
Right.
For example, if investors panic and start dumping shares during the closing auction,
Yeah.
it could lead to exaggerated price swings, even with the price caps in place.
So managing investor expectations and educating them about how CAS works will be crucial.
It will be.
Sounds like there are a lot of potential challenges to consider. But before we get too bogged down in the what ifs,
Yeah,
let's step back and think about the bigger picture for a moment.
that's a great idea. Sometimes we get so caught up in
Yeah.
the details that we lose sight of the overarching goals.
Exactly. So let's move on to the final part of our deep dive
Yeah.
and explore the potential long-term implications of this proposed shift to CAS.
Okay.
Could this be more than just a technical change? Could it actually reshape the Indian market and its role in the global economy?
Welcome back to the deep dive. We've been, deep in the weeds of SEBI's proposal
Yeah.
to change how stock closing prices are calculated in India,
Right.
moving from VWAP to CAS.
All right.
We've talked about the mechanics, the potential benefits, the challenges.
Yeah.
But now I think let's take a step back and think big picture here.
Okay.
What could this mean for the Indian market
Yeah.
in the long run?
It's fascinating to consider, isn't it? This seemingly technical change could
Right.
actually have ripple effects.
Throughout the entire financial ecosystem.
Okay.
If CAS is implemented effectively, it could signal a real shift towards a more mature, transparent, and globally competitive Indian market.
Okay. I'm all ears. Paint me a picture.
Sure.
What does a more mature and globally competitive market look like?
Right.
How does CAS help us get there?
Well, one of the most significant impacts could be on foreign investment,
Okay.
as we've discussed. CAS has the potential to reduce those pesky tracking errors
Right.
that can make passive funds wary.
Yeah.
A more predictable and reliable market
Right.
is a much more attractive proposition for global investors,
Mhm.
especially those big institutional players
Right.
who manage billions of dollars.
So we could see more foreign capital flowing into India,
Potentially, yeah.
which is generally seen as a good thing for the economy, right?
Right.
More
Yeah.
investment means more growth, more jobs, and so on.
Precisely. But it's not just about the quantity of investment.
Right.
It's also about the quality.
CAS could encourage a shift towards more long-term stable investments.
Okay.
Rather than the kind of short-term speculation that
Right.
can sometimes create volatility.
That makes sense if investors are confident that closing prices
Uh-huh.
accurately reflect the true value of companies.
Yeah.
They're more likely to hold on to those investments
Right.
for the long haul,
Uh-huh.
which provides stability for both the companies
Right.
and the market as a whole.
Yeah.
I remember reading that one of SEBI's goals is to make the Indian market more appealing to long-term investors, like pension funds.
Uh-huh.
Could CAS be a step in that direction?
It could be a more stable
Okay.
and predictable market is naturally more appealing
Right.
to institutional investors
Yeah.
with long time horizons like pension funds.
Right.
They're not looking to make a quick buck.
Right.
They're looking for steady, reliable growth over decades.
It's interesting to think about how a change to a seemingly technical detail,
Yeah.
like how we calculate a closing price.
Could actually have these broader economic and social impacts.
Right.
But I also want to be sure we're thinking critically here.
Okay.
Are there any potential downsides or unintended consequences that we should be aware of?
Absolutely. It's important to consider the potential risks
Yeah.
along with the potential rewards.
Okay.
One concern that's often raised
Yeah.
is the possibility that CAs could actually increase market concentration
Okay.
rather than making it more inclusive.
Interesting.
Remember, the closing price in a CAS system is determined by the auction,
Right.
where the biggest players have the most influence.
So if a handful of large institutions dominate those auctions, it could give them even more power to set prices,
Exactly.
potentially squeezing out smaller investors and reducing competition.
That's the worry.
Okay.
And it's a valid concern that SEBI needs to address.
Right.
They'll need to implement strong safeguards to prevent any kind of collusion or market manipulation.
Right.
During those closing auctions, transparency is crucial.
Speaking of transparency, we talked earlier about how some critics argue that CAS actually reduces transparency by obscuring the full order flow throughout the day. Do you think that's a legitimate concern?
It's a trade-off, as we discussed.
Yeah.
You gain transparency in the closing auction itself.
Right.
But you lose some of that granular visibility into individual trades throughout the day. It's something that regulators and market participants will need to weigh carefully.
Yeah.
Perhaps there are ways to strike a better balance.
Yeah.
Making sure that key data is still available for analysis without compromising the integrity of the closing auction.
It sounds like there's still a lot to figure out.
There is.
Even if SEBI decides to move forward with CAS, it's not a simple plug-and-play solution. It requires careful consideration, robust safeguards, and constant monitoring to ensure it's achieving its intended goals without creating new problems.
Exactly. And it's a reminder that financial markets are complex, dynamic systems. There's no one-size-fits-all solution. And any change, even one that's intended to improve things, has the potential to create unintended consequences.
It makes you realize how interconnected everything is.
Yeah, it does.
This one little change to how we calculate closing prices could have implications for everything from investor behavior to market stability to economic growth.
It's a great example of how even the seemingly technical aspects of finance are deeply intertwined with broader social and economic issues. And it highlights the importance of informed, engaged citizenship.
What do you mean by that?
I mean that we as individuals shouldn't just passively accept these changes or dismiss them as irrelevant to our lives. We need to understand them, question them, and hold our regulators accountable for making decisions that benefit everyone, not just a select few.
That's a powerful message. It's easy to feel powerless or overwhelmed by the complexity of the financial world. But as you said, it's our responsibility to stay informed, ask questions, and engage in these discussions. After all, these decisions ultimately impact all of us.
They do.
Whether we're actively trading stocks or not.
Exactly. And that brings us back to you, the listener. What we've done in this deep dive is provide you with the tools and information to think critically about this proposed change. Now it's up to you to form your own opinions. Do your own research. And maybe even reach out to your elected officials or SEBI itself to express your views.
That's what the deep dive is all about. We're not here to tell you what to think.
That's right.
But to equip you with the knowledge and context. To think for yourself, and as we've seen today, even something as seemingly technical as a stock closing price calculation.
Can spark a much larger conversation.
It can.
About fairness, transparency, and the future of our financial systems.
Well said. And who knows? Maybe this deep dive has even inspired some future financial regulators or market innovators out there.
That would be amazing. So to everyone listening,
yes,
stay curious, stay engaged, and keep exploring.
Absolutely.
That's how we make sense of this complex world
and
shape it for the better.
Right.
Thanks for joining us on The Deep Dive.
Until next time.